Good evening, and welcome to the ShadowTrader video weekly for Sunday, November 4th, 2007. This is coming out a little bit later than usual. It's currently 8 p.m. Eastern Time right now, and I'm just getting to the video now. I actually had one recorded for you guys quite early this morning. I was trying to do a little picture-in-picture for you, as promised, because I promised everybody that I would put some video on it so you could see what I look like, but for some reason the technological gods are not smiling on me today. I could not get the video to upload with the video in it, so I'll have to do that in a little separate piece. Anyway, S&P this week, this is the chart in front of you. We had quite a topsy-turvy week. It was a Fed week that was here on Wednesday. Markets went up pretty strong, tested at 1550, but main thing to consider here is notice lower high. First time in a while that we've actually made a lower high after falling down. One of the things that I'm going to be keeping a close eye on this week is, of course, Fibbo, as always. Definitely be watching this 15, I'd say 25-ish area, right? If you measure all the way to the top, from the top to the bottom here. Here's the 25% Fibbo retracement, but when I say 1525, I mean 1525 up in here in the 50%, or the 38.2 at 1515, I guess. The 38.2 is probably more important, so keep that in mind. The 1515 would be a 38.2% retracement. Halfway would be up here around 1522 area, which is also a lot of moving average resistance. The Dow really got knocked here, and major trend line break here in the Dow. This was prior swing lows here. You can see how that trend line's been violated. The SPX basically did the exact same thing, right? Obviously, you can see that here, violation here. If you take off this Fibbo, one thing I did notice that I think is interesting is go back here to these swing lows, which is when we went all the way down to 1370, and do yourself a favor and draw it just like this, touching right here. It's actually even worse. It's even a more bearish situation, I would say, if you put it through here. People always ask me, why don't you do it from the shadow? Sometimes you do the body, sometimes you do the shadow. And I say, you know, this is a good little impromptu lesson on trend lines. It's always where it touches the most places, and more importantly, where it just makes the most sense. This makes a lot more sense to me, I think, than this. You know, what is that? That's really nothing. But notice that here, it's a perfect touch to the low of this hammer, and once you touch this hammer, you go right through it. Notice that this area here is really important to cut a trend line through, because look, you go right to this body at the bottom, but more importantly, you had two bottoming tail hammers here on the S&P supporting. So I think that's really important. Now, so far, Friday's action closed relatively strong, right? However, one of the most powerful patterns on the chart is something that in the broadcast we always call it the quote-unquote Larry Williams, because Larry Williams talks about this, and it's very simply when bottoming tails get violated to the downside. So you can see here we had two, and yet on Friday price is pushed into that area. Now it won't be uber super bearish until we close below that, but there is a possibility. So if we break the 1500 again and go into these low 1490s, then it would be the Larry Williams setup, where I think all hell would break loose to the downside. There would be a lot of selling here, because you notice that bulls stepped in here on October 24th and defended. October 25th, they stepped in again at the lows, defended, then got knocked back, defended again. At this point, anything sub here, I think, might even break the market down below the 200-day moving average, which would create this sort of quote-unquote filling up the triangle that I always talk about. Okay? Let's talk about overall volume matrix. That's right here. This is the entire week for those of you joining us for the first time, Monday through Friday. Green and red is pretty self-explanatory. What we were up or down on the major averages, Dow, S&P, and NASDAQ. This is the overall volume increase or decrease over the prior day on the NYSE and on the NASDAQ. This is called the breadth ratio, which is very, very important. This is the amount of up volume divided by the total volume multiplied by 100, I believe, which gives us a number between 0 and 100. And if it's over 50, obviously that's more bullish than bearish. If it's under 50, like here, then you have negative breadth, as I call it. What's interesting about these breadth readings is that here, Friday, the markets enjoyed a bounce. Breadth never got positive. As you can see, we were on the NYSE still at 44, a little bit positive on the NASDAQ. We had a strong bounce day on Monday, Dow up 63, S&P put on 5, but the overall volume decreased. That's kind of bearish. We did have some accumulation on Wednesday on the Fed day, right? Markets closed very, very strong that day. Volume was up, but then volume was also up pretty heavy on the NYSE the next day when the markets just got smacked on the expensive crude, Citigroup, Merrill, etc. And then again on the bounce on Friday, which was really just late day, no increase in overall volume whatsoever. So we accumulated a little bit and we distributed a little bit, but I would have to say we distributed a little bit heavier than we accumulated this week on Thursday. All right, one of the things that's been popping up lately and in the news, which everybody should know about, is how crude is just going through the roof. We are almost at 96 a barrel right now. This action right here is actually 11.2. This, what you see here, is the trade that's already happening now overnight. This is actually where we closed on Friday. On the NYMEX, we went as high as 96.02. So I think we're going to see 100 pretty soon. Interestingly enough, however, the XOI has made a double top. This is the Amex oil stocks, which is more of like the refiners and drillers as opposed to the services. This is where CVX and XOM, Conoco, Phillips, etc., COP, this is where they hang out in this index. To me, this is looking kind of like a rollover in that, you know, when they rallied here, they weren't able to make a higher high, rolled over since then. Some people are saying that this is actually going to start pinching their profits maybe a little bit. I don't know. We shall see. The services, however, on the other hand, are still running strong. We still see strength in oil services. Failed to make a higher high. I don't know yet if this is going to be head and shoulders, but it doesn't look like it to me. If this was going to be head and shoulders and this was going to fall down, I would expect that this Friday's action wouldn't have happened here. So this is looking to me like a failed head and shoulders now in the oil services, and these may push upwards a bit. Okay, and that's pretty much what's probably going to define the next week in trade, because as some of these sectors, energy, are strong, you have other sectors that are very key in the S&P looking like this. There's your banks. It doesn't get any uglier than that, folks. Okay, this is the brokers. Again, ugly. I mean, how many times do we need to test here? 1, 2, 3, 4. Now we're below it, right? Before we start to go lower. So these brokers could easily go to this 200 area. Really, what's holding this thing up is GS, because GS continues to stay stronger than the average bear. Although Friday it did get the stuffing knocked out of it finally. But usually you see GS not going down as much as the others. But obviously Merrill is just decimated. Lehman is starting to crack, but still has a little bit of support there. BSC completely just gone. So there's also tug of war inside of these sectors. I think if all of them start to roll over, then obviously we'll see that XBD a little bit lower. Continued strength in tech. Google continued to make 52-week highs this week. Baidu as well. Amazon is still looking strong, although rolling over a little. And look at Apple, still holding up really well. So the NASDAQ, especially this NDX, the leaders, the generals, so to speak, is just absolutely showing no cracks in its veneer. Similar to the S&P, I would be watching for anything below Friday's lows, which would signal all-out disappointment in the NASDAQ, because, again, that would be that sort of bottoming tail violation play, where bulls came in hard at the 2180 to defend, brought it up to 2213. If we go back to 2180 and the NDX actually trades under the 20 MA, which is, I mean, wow, that hasn't happened since August back here, and even here just for a little bit. We shall see. All right. That's about it. We talked about crude. Gold continues to rock. Gold breaking the 800, very strong. There's 79.83 on the GLD. Utilities did get some little pocket of strength recently, but have then pulled back. But I think they pull back to a higher high here. I still think this sector is going to go. This is benefiting from the current cycle of rate cuts, etc. They tend to be defensive. I would be looking here. And last but not least, I will leave you with the home builders. Remember what I talked about last week about this possibly being the beginning of the end for the bears? Well, I was wrong. It never confirmed, right? It never, ever confirmed. It did break trend for about a hot minute, right about here. And then I was saying, watch, if this goes sideways and breaks and moves closer to 400, then all these bears are going to be shocked because they're all going to be forced to cover. But apparently the Home Builders Index telling us, you know what, Peter? Not yet. We're still ready to go down some more. And when you look at the bigger term chart on the monthly, it still has room to go, right? You could still deflate down to here very easily to take all this froth out of it from this multi-year rally. So apparently, builders saying not yet, still going down. All right, on behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, from all the good people in Chicago, Illinois at Think or Swim, be careful out there next week, right? Shares are kind of under pressure now. First major lower high in the S&P, and the uptrend is snapped. Rallies back to this area here are possibly shortable. As always, I wish you good trading and good night.